to the homeowner that does projects like these. As far as their motivation to purchase these SRECs is utility companies are regulated as a certain amount for renewable portfolio versus dirty energy and other things. So that's kind of their motivation to encourage people to do this as well. Alright, so with $3 billion on residential, there's tax credits for certain improvements to your homes. There's things you can do, small things like window energy, window door energy efficiency improvements. Those tax credits expire here at the end of 2011. Can be up to 10% of the cost of project, up to $500. Keep in mind anything I throw out there today, definitely look in, if you don't take something from here and say, oh, I'm going to go do this, and then assume when you file your taxes everything's going to be fine and good. There's generalities, and taxes are sort of dangerous. There's a lot of details to look at. So if you think of doing any of these things that are touched upon here today, definitely talk with someone in detail and make sure it does ring true for your situation, because all the I's and T's you dot are going to make it whether or not you can take advantage of some of these things. As far as the green building residential credits, they're non-refundable. I'm going to refer to non-refundable, probably a decent bit here this evening. That means you must have tax liability for them to be beneficial. You can't get more money back than what you paid in. With most of the credits we're talking about here, they do have the capability to carry those forward and use them for future years, so it's not like you lose them forever. With the residential projects, they can be simple improvements like the doors and windows I mentioned, or they can be replacements. There can also be major projects, and that would be like solar, wind, geothermal, things like that. Yeah, so solar electric, solar water, small wind, geothermal. These projects can get up there in price pretty good. Like I said, some of the solar projects proposals you see out there, can cost $30,000 plus. For those major projects, the federal credit is 30%. North Carolina tax credit is 35%. North Carolina has some additional stipulations to it. Can only be applied against half of your tax liability for a given year in North Carolina, and can only be carried forward a total of 5 years. And there's dollar figure limitations. If you're doing solar, there's only X dollar, I think it's $10,500 that you can claim as far as a credit for North Carolina for that. Some additional things out there you can, if you're doing a $30,000 improvement to your home, normally the assessed value of your home is going to increase by that $30,000 amount. With like a solar, wind, geothermal project, they give you, I think it's an 80% exclusion against the increase in your property tax value. There's some other things out there, similar things in building where you can do solar, wind, geothermal with commercial buildings. There's going to be different specifics, different dollar limits, different applications. There's other things you can do with energy efficient commercial building tax deductions. And on those, there are basically up to $1.80 per square foot you can receive as far as an incentive, depending on what you do, the improvement in your efficiency, things like that. There's a renewable electricity production tax credit if you're really out there and producing electricity from a renewable source. And with the business side of things, there's additional depreciation benefits, other things you can do that are going to affect your overall tax situation that may not be available to you in a residential situation. Next one I'm going to kind of cover on here briefly is historic preservation. This one assumes out there to encourage the protection and preservation of historic structures. And historic structures, there's a couple of different definitions out there, but if it's listed in the National Register of Historic Places, devoted into the historic district, it might be worth looking at as to whether you meet all the qualifications or not. There's federal credits for income-producing properties. In North Carolina, there's credits for both income-producing properties, non-income-producing properties. Federal credit was 10% for buildings placed in service before 1936. It's higher ones for certified historic structure. In order to do this, you must have substantial rehabilitation, and the way they define that as the expenditure must exceed your basis or cost in that building in a 24-month period. So you can't just go in and replace a couple things. You're going to have to do a lot of different things here to qualify for this credit. They often increase these in disaster areas and other areas, like in, I believe in the New Orleans area, after Katrina, other things, they bumped up the limit and trying to basically use that to stimulate growth in the area. It is non-refundable as well, but can be carried forward to other years. North Carolina, there's a couple different aspects to it. There's 25% for qualified federal, 20% projects. So basically, you're looking at a total of 40% there if you hit that bigger project. There's also a 30% for qualified non-income producing historic structures. In layman's term, a non-income producing historic structure is like going to be your home or something like that. So there are things that North Carolina will offer out there. Additional things the state does is alternative for mill rehabilitation, other things like areas where you've seen textile mills, production areas, things like that. They're trying to encourage people to reuse those buildings, do something else with it. I don't know for a fact, what they did or didn't do there in the Durham area with all the old warehouses, but they've done a lot of different interesting things there. And when the people that were involved in that, I'm pretty sure they probably somehow utilize these tax credits to make those projects more attractive or affordable. North Carolina credits, non-refundable, but can be carried forward. Film industry, this has been a pretty well publicized one here lately, with a lot of big projects coming in. North Carolina, has done a lot in the last couple of years to increase the competitiveness of its incentives because of lobbying and other efforts of a lot of people here in the state. Helps the state plan films be competitive with other states, and what happens when that happens, if a large film comes here, you have the caterers, you have all the production crew, everything else. I mean, it just kind of filters through the economy, and that's basically how you view these as the state's viewing it as a viable and good investment to do tax credits for these projects because the money's going to come back around in another way. With this, there's really no specifically targeted federal credit. I'm not saying if you didn't do different things with projects, other things, there's probably credits out there that you could apply, but nothing specifically targeted towards film. North Carolina, I believe I have the latest figure in there, but 25% tax credit on qualified expenditures. We're fortunate enough to have some people here tonight that deal with this day in, day out, so after I've wrapped up, I'm going to put them on the spot and ask them about their hands-on experience with it. So, it is a refundable tax credit. They basically go through an audit process, everything else here. You must spend at least $250,000 in qualified expenses. That $250,000 has to be in what they qualify, I believe, as one shoot. I've seen issues with that, with how it's structured or broken out. That's kind of been my experience there. You have to file an intent to film form, complete production, submit form to the North Carolina Department of Revenue. That starts the audit process. Once the audit's complete, the refund is dispersed. There's limitations and details in this. I would really recommend you deal with people that deal with this day in, day out, and are specialists in this area. They know the people at the North Carolina Film Office, the local people here, everything else. So just kind of going through that, but it's a great incentive in my mind because it does trickle down to the economy, and you have all these people that are able to stay in Wilmington and work on these projects instead of having to go to Louisiana, Michigan, these other states that North Carolina is typically bumping against. And we've been fortunate enough in the last, 10 or 15 years to have major TV production, shows going on here, but now it's a little bit more of the big film that's kind of kicking in. The last one I'm going to cover here tonight as far as the 4 credits is North Carolina Qualified Business Investments. This is actually a pretty interesting credit in concept. concept. There's $7.5 million worth of the credit available annually. As far as I know, they've never hit against that cap or had issues with the money running out. It allows 25% North Carolina tax credits of investments made in business that have received the status or are via a qualified grantee business. So there's basically an application process that a business can go through with the Secretary of State to get qualified as one of these businesses. Then any outside investors that invest in those businesses can receive a 25% North Carolina tax credit for the money they put into the company. The other thing they can do is go through other vehicles to get that as well, and each company doesn't have to get certified. And I'll go over that, I believe, on the next slide. This one is also non-refundable and can be carried forward for up to 5 years. Status is available for some specific industries: manufacturing, processing, warehousing, wholesaling, R&D, service-related industries. You can't use this credit, like say, I start another company that does film production tomorrow. I can't put my own and get that company certified. I can't use my own money and then just basically work in that company and get the 25% credit. So that's really the one loophole or area they've tried to close there or keep closed, and they're not allowing owners to invest in their own companies to do it that way. It's kind of encouraging outside investment. One other thing that's relatively new here in the Cape Fear region is the Inception Micro Angel Fund of the Cape Fear area. We've had Rich Novak, I can't remember if it's his last one on incubators or one of our more recent panel discussions here. He was on the panel. They've started this fund. That fund has received, they went through a bunch of hoops with the state to receive basically blanket certification. So, and if you're an investor in that fund, you get 25% back for whatever you invest in that fund. You can also, through that fund, do things which are called sidecar options, which is, if I'm an investor in that fund, Scott starts another business here, I want to invest in his business, I go through the fund, I get my 25% credit for what I'm giving to Scott, without Scott having to go through the certification process for his business. So there's other things you can do there. And it's really a great thing in that it's basically going to force this fund, there's other funds similar to this in the Triangle area, to focus on investing in North Carolina businesses and to support early stage North Carolina businesses and target them. So I think it's a great thing. It's not a very widely or well publicized credit, I think, at this point, and that's kind of part of the motivation of having an event like this is, you know, hopefully you'll take something from here where if you hear someone in that situation, you'll say, hey, there's something out there you might want to look into or talk to someone about. As far as other localities, just want to talk a little bit about what some other areas are doing. Probably pull examples of things that work, don't work all day long out of different areas. I want to talk about Philadelphia, a couple things they're doing specifically, because they are doing some things related to encouraging sustainable business, other things there. One of the things they have is a sustainable business tax credit. It's a small program. I think it's limited to 15 to 20 companies a year. And you can receive up to $4,000 in credits in a given year